Hi, everybody, and welcome to the BloombergQuint virtual roundtable on green business, which is going to discuss today why ESG is an imperative for India Incorporated in the new normal, which is really this post pandemic period that we are talking about. And this is a discussion that we are doing as part of our special focus on World Environment Day, which falls on June 5th this year. Through this virtual roundtable, we aim to initiate an insightful discussion on the entire ESG agenda. ESG, of course, stands for environmental, social, and governance agenda, and why it is becoming increasingly important for organizations, especially in India. And to help us do that today, we have an eminent panel with us. We have some great practitioners as well as people from the advisory side of things. So, to first start off, ladies first, I'd like to introduce Shloka Nath. Shloka heads sustainability and special projects, policy and advocacy at the Tata Trust, and she is acting director of India Climate Collaborative. Welcome, Shloka, and thank you for being with us. We also have Sudip Sural. Sudip is Chief Executive Officer of Care Advisory, Research and Training, which is the advisory and research arm of Care Ratings, one of India's most respected rating firms. We are also privileged to have Ram Vaidyanathan, who is again a practitioner, who is a GM and Head Environmental Sustainability at the Godrej Group, which is known for decades for doing some amazing work in the environment field. And finally, last but not the least, we have Vishvesh Prabhakar, who is the Managing Director, Growth and Strategy Sustainability for Accenture. Again, Vishwesh brings a lot of global experience with him because Accenture as a company, it's very interesting how they approach sustainability. So thank you everyone for joining in. I look forward to a great panel. I look forward to learning a lot from you all also. But first, I'd like to set the context. I know ESG is defined as environmental, social, and governance, but I think the S often gets interchanged into sustainability. So I'd like to quickly start by asking you, Shloka, how do you see ESG? How do you define it? And then perhaps followed by Sudeep and Vishwesh. I'd like to get three different perspectives.
Thanks, Ivor, and thank you so much for having me on the panel today. I think it's a great question to actually sort of begin this whole discussion and debate because sustainability can mean just about anything under the broad rubric of doing well by doing good. And while sustainability can actually mean different things to different companies, ESG is a very specific set of criteria, namely environmental, social, and governance, that companies can actually measure and report against. So, in my opinion, sustainability is not really a standalone concept. It cuts across all the three facets of ESG. You can't report either on environmental, social, or governance factors without that sustainability lens. And in recent years, I think what's important to know is that sustainability has really become synonymous with going green or reducing your carbon footprint. So when most people think about sustainability, they think about things like reducing energy consumption, tracking water usage, and these are really important goals for any organization that does want to reduce costs or improve performance as well as make a positive contribution. But I also want to just point out that that's a pretty narrow definition of sustainability. Sustainability is an umbrella term. It encompasses all of a company's efforts to reduce its impact on the world around it. So, for instance, sustainability can also mean, creating good jobs or promoting gender equality, in addition to helping the environment. But companies really do struggle to get their arms around such a broad concept, and so for that reason, sustainability has never really been integrated into most organizations. They struggle to measure and report on performance. But ESG, on the other hand, is much more specific. It's data driven. It's focused on the three dimensions I mentioned. And rather than going, just green or being a responsible steward, it has those very clear criteria. And I think it's really what encompasses or allows investors, the ability to determine whether a company provides more good in the world than just its profits. You have an investor on this panel, and I'm sure he'll speak to this as well. The environmental dimension, of course, is most closely related to what most of us think of when we think of sustainability. It's focused on improving environmental performance of a company. But again, I just want to point out that sustainability is also closely linked to the other two factors as well, social and governance.
Okay. Thank you so much, Shloka. Sudip, Vishvesh, would you like to have anything to add to that? I think Shloka gave us a pretty comprehensive take on that.
Yeah, I would actually agree with what Shloka said. I think sustainability is an all-encompassing objective, and if you focus specifically on ESG, that in turn will lead to sustainability. So let's take each of these one by one. ESG. So I think it all starts with the environmental factors, and the starting point really is that today I think one of the most difficult and complex things to understand is how organizations deal with climate change and how climate change actually manifests into financial risks. If you take the example of the recent floods in Uttarakhand, we saw that several power plants actually got damaged, both on the public sector side as well as on the private sector side. And there are reports which say that the water diversion has caused significant damage to the quality of the river downstream. So social again is something that is always touching us, be it climate change induced risks in these power plants, or the risks which are manifesting themselves today. Everything has a social implication, and this has been, as you are aware, very, very costly lesson for us over the last 12 months. And but I think the governance is really the aspect which has far reaching implications. And what is important is how we are treating various stakeholders. Are we treating them on the principles of fairness and equity, or are we transactional about many of these relationships? And these are not only shareholder relationships, these are customer relationships, supplier relationships, and the obviously the society that we live in. And I think one of the other examples that prove that governance is important is the fact that we've seen so many financial sector entities collapse, many of them in the recent past. And a lot of it obviously has to do with governance, or rather the lack of governance. So ultimately, I think if the goal is sustainability of the environment and the society that we live in. Focusing on ESG is going to help us reach that goal.
Great. So, Vishwesh, I'd like to actually move on and ask you the next, because I think we have a great, we've defined it very well there. But, from your perspective, and again, the company that you represent, how do you think that the pandemic has really changed things? And why has it made getting sustainability or the entire ESG concept right an existential crisis? Why is it important from the perspective of business resiliency? And how can a robust ESG framework really help mitigate the impact of the current pandemic crisis, as well as perhaps reduce risk of additional future crises that may be coming?
Well, thanks, Ivor. In fact, let me take off from where Shloka and Sudip kind of embarked in terms of demystifying ESG. I think the point which I want to really add is that we are essentially at an existential tipping point. I'll share some facts. When it comes to climate change, essentially the goal in terms of the temperature which we can afford is about 1.5 to 2 degrees Celsius by the end of the century. Now, given the government and the corporate commitments we have as of today, we are essentially trending between 3.5% and 4%. And this decade is extremely important for governments and corporations to really deliver on one aspect of ESG, which is climate change. And more than that, our research highlights that 70% of this climate change is contributed by corporations. And as of today, 100 companies contribute about 70% of the worldwide emissions. So very clearly, from a business perspective, the traditional purpose of the business was to really serve its shareholders. But increasingly, CEOs are realizing that this has to really expand beyond shareholders and move to stakeholders. And that's why the purpose of the organization itself is changing from essentially, focusing only on profits, but also on purpose, on people and planet. Essentially, it's becoming more broad-based, and these four things are becoming intertwined. And as Shloka mentioned, they have to really straddle as a thread through all the functions of the organization. Now, more in terms of pandemic, again, stepping back, and reflecting, what has been happening in the business world over the last 40 odd years. If we start from 1980s to 2000 was essentially, 20 years of globalization. Many of the firms were really going from local to global. That was a very big wave. Now, starting from 2000 to 2020, essentially it was transition from analog to digital. We at Accenture believe, starting 2020, the next couple of decades will essentially focus on a twin helix of digital and sustainability. Now, what has pandemic made us realize? It has made us realize essentially two very big things. That focusing on long-term sustainability of any corporation is very important, right? So it's very important to look beyond profits. It's very important to look at the entire resilience and the risk-taking ability of an organization. And organizations which pivoted to digital proactively before the pandemic began were able to adapt to the pandemic much better than organizations which essentially had delayed that very important exercise. And the second thing is very clearly, the implications of the pandemic, primarily the social implications, are so immense. One data point suggests that almost 100 million people worldwide are going to move into poverty. Now, organizations are essentially going to recruit from the same community. And if they are not seen as entities which are recognizing this and embedding that into their business models, it will be very hard for them to attract talent, right? So the millennials and consumers really want to associate themselves with organizations which essentially focus on stakeholder priorities. And hence, this pandemic has shown us that very clearly organizations need to really plan and focus beyond the short term and really have a long-term focus on their ability to kind of manage the ups and downs which come in a business in the course of its life.
Thank you for bringing out, I think, those great data points, Vishvesh, and for really explaining so well how the pandemic really changes things. Ram, I wanted to come to you as a practitioner, right? Now you've seen in India incorporated and ESG for a while. So how do you see ESG on the ground today? Vishwesh mentions it's very important today, right? From things like appealing to millennials, and I'm sure Sudip will bring in the fact about the financial aspects of the financial risks, etc., that companies face when it comes to not getting ESG right. But how do you see it? Where does ESG stand in companies when it comes to understanding and implementation in India?
Thanks, Ivor. It's very actually all the panelists so far have summed up what ESG generally means, and I think the key word to take from what they've been speaking about is who are the stakeholders. And I think that's something that companies have really understood, that it's not just a particular community of stakeholders who are now asking for ESG to be a fundamental core of businesses' strategy going forward. What we also have to understand is that ESG, it's actually existed in many forms within organizations. It's just never been crystallized into the ESG tripod as we know it today. So it's always been there in some form, because at the heart of it, what is ESG but de-risking? You're trying to remove risks, and that's what any business looks for, is how do I remove risks? Now, what has really changed, I would say, is that with the growing earlier, like I said, some investors, some shareholders may have had some interest, so there was not as much external push or external pressure on organizations to be really ESG, not just compliant. I think that's the big change. We've moved beyond just compliance to being proactive in terms of ESG strategy. It's not good enough just say, I tick all the boxes. I think that approach is not good enough anymore. Everybody from your consumer who's more demanding and has a bigger voice in terms of demanding for more sustainable products, even to the communities in which you operate. So the idea of a social license to operate, which your communities give you where you operate. So that all this is the crescendo is growing. There's a lot of since the visibility is there and companies themselves have poised or prepared themselves to be sustainable in the long term. I think that's a very interesting point Vishvesh brought up. It's about what is the frame of reference that generally people have used when evaluating business decisions or corporate strategy. I think the frame has become bigger. Rather than looking at the 3 to 5 year horizon, people are looking at the 15, 20-year horizon, which is why you're seeing more commitments towards things like EP100, RE100, EV100, or science-based targets, which look at a much bigger window. Because I think looking at sustainability in the longer run is really more practical. And the big difference on the ground, I would say, compared to last decade to this, the main one has been that I think this is more of a decade of action. I think the expectations are different. I think people have gotten a little bit, I would say, fatigued with the commitments to the various protocols or the various, global commitments and things. I think people want to see action and they want to see results on the ground. I think one of the most fascinating questions that was posed to a bunch of us sustainability professionals was by a person who said, if all of you claim you're doing such great work in sustainability, why isn't the needle being moved? So I think that's a very, very important thing. I think it's now very important to put our money where our mouth is and demonstrate, be more transparent about our sustainability. I don't think it's enough for companies to self-disclose, for example, anymore. I think there needs to be a certain minimum standard of transparency and disclosure in ESG. And I think that's the expectation in this decade. You're going to see tremendous dynamic ecosystems change in terms of regulation as well as technology in these next 5 to 10 years. So I think this is a make or break it time. I think that's the main thing. On the ground, there's a lot of buzz about actions and projects and really seeing change happen. So that will be the big shift.
I think you put it very well, Ram. This is make or break. And keeping that in mind, Vishvesh, my next question is for you. Considering that ESG sustainability is so important for India, especially as India sort of takes its place, it takes its rightful place on the world stage. How different is ESG on the ground in India vis-a-vis other developed economies? How do you see it?
No, in fact, I would really segment this into two parts. When I look at, the top 100 companies in India, they are comparable to best in class. So in terms of their ESG practices, in terms of the vision, implementation on the ground, and the innovations which the top 100 or maybe even the top 250 companies are doing is really best in class in India. And I'll cite a couple of examples, right? And these really come from the Tata Group. Right. So way back in 1912, the Tata Group kind of introduced an 8-hour workday. Then in 1920, they introduced Provident Fund for their workers. During those times, the term ESG was not even fashionable, right? Or had not even been coined. Another example is ITC. ITC, for a company of its size, is possibly the only company in the world which is carbon neutral, which is water positive, and essentially solid-based recycling positive. So I'm just sharing two examples, but there are numerous examples in the top companies of India which really are best in class because they are adopting global practices at speed, and they're actually using the Indian talent and the frugality orientation to really innovate possibly much better than global companies. I think what work these companies have to do more is really in terms of advocacy, in terms of the innovation they are doing, and kind of make themselves more aware at global forums. I think the more challenge, Ivor, I see is really in the mid-sized and the small companies, where the challenge is primarily on three fronts. One is really awareness itself, right? What is ESG? Why is it important, and why does it make sense to invest in ESG? I think that's one challenge. The second challenge is really finance. I'll just give you a very simple example. I live in Gurgaon, and we have a problem of air pollution. And one of the big causes of air pollution is that small entrepreneurs are burning plastic or tires in open areas because A, they are not aware, they are not aware of the processes, and they are not aware of the implications of burning plastic and rubber, and the damage it can cause to them and the environment. So, and the third thing is really, is technology. Technology is very important. Small and mid-sized companies need those systems which help them capture the data and report on their data, which also are going to be part of the regulatory requirements for the top 1,000 companies in the next couple of years. On financing, I would really like to add, another very simple example, right? Companies really need to invest in environmental equipment, sewage treatment plants, and many companies avoid doing that. Very clearly, they don't have the capital. So if innovation and capital could be made available to these companies, I'm sure they can actually kind of up their, I would say, quotient on ESG benchmarks when it comes to these matters. The third point is regarding regulations. I think the government of India over the last 8 or 9 years through its BRR initiative has been very consistently focusing on ESG. And this year, essentially, they have launched an integrated ESG concept, which they are saying is going to really become voluntary in 2022 and possibly mandatory from 2023 for 1,000 organizations. So I think at a regulatory level, the intent and the direction is right. And we need to really focus on the mid and the smaller organizations much more.
Thanks for explaining that, Vishvesh. As to and Ram, of course, in terms of where ESG actually stands and what we need to do. But Sudip, I want to throw this back to you in a different way. Now, ultimately, everybody really looks at the bottom line, right? And so, how do you see the relationship between ESG and profit, or ESG and the bottom line? And are companies with strong ESG programs really outstripping performance when compared to peers? And what is also perhaps the role of investors in driving the ESG agenda? Because investors are ultimately looking for profit.
Yeah, that's an excellent question. So I think, a lot of the ESG initiatives around the world are being driven by global investors. Today, we have almost $35 trillion of assets under management that are ESG focused. And a lot of that is being also driven by the regulators and the financial policymakers. So on the investing community, I think it is very, very clear that investors are saying that if companies are ESG compliant and if they are weaving their corporate strategy around ESG and sustainability, then investors definitely get better returns. So investors are willing to put a premium on such kind of companies. Even on the debt side, I think, again, it's been proven that companies which are focused on ESG, they will get credit spreads which are thinner. When we look at the global investment community, all of this is really targeted more towards the larger corporations. I think perhaps now the time has come for us to get into the mid-market and the SMEs, which have not got this global capital flow. But even otherwise, in terms of the global capital flows, if you look at the top 100 or 200 companies in India, Vishvesh was making a point about the business sustainability report. I think that again has gone a long way in bringing all these companies into the global limelight. But a lot, obviously, a lot more needs to be done on disclosures and transparency and reporting. But essentially, if you look at bottom lines, there is no direct correlation because ESG and sustainability is not a short-term game. It is a longer-term, effect which happens. And let me give you some examples. If you take the example of a manufacturing company, there is obviously a potential for manufacturing companies to reduce wastage, conserve water, deploy lesser energy in their operations. So all that can definitely bring in a kicker to the profit. But I think the more sustainable kicker, so to speak, comes when companies follow ESG over a longer period of time, focus on materiality and uh, the stuff that can they can make a material difference to in terms of ESG, measure those, and then course correct over a longer period of time. And here again, boards have to play a very, very important role, because unless boards have the oversight on managements in order to create value for all stakeholders over a longer period of time, whether it's customers, shareholders, the suppliers, society, etc., we will not get into a position where ESG becomes a game changer. So I think to your question about bottom lines, it is definitely the case that ESG compliant companies will get themselves attracted to the global capital flows, because the investors will over a period of time find that these are the companies where returns are better and more sustainable. Last but not the least, I think for companies that are operating in sectors which have high regulatory implications, whether it's banks or parts of infrastructure like roads, power plants, etc. If you have a robust governance, what you're essentially trying to do is to ensure that you don't get into regulatory spats. You are essentially trying to ensure that the top management bandwidth is not being spent in in managing legal cases, arbitration, etc. So automatically that ensures that management is going to focus solely on strategy, right? So some of these are the indirect benefits. No, I would just say to conclude that there are no direct benefits to the bottom line, but obviously they will accrue more over the longish period of time.
Thank you, Sudip, for providing such a well-rounded answer. I think you pretty much touched on every aspect over there, and I'd like to really move on to another aspect. Really, one of the things in India that's very necessary and is also big is CSR. Now, I wanted to really ask you, Shloka. Now, coming from the Tata Trust, and maybe Ram, you can also add to this question, since you all at Godrej also do some great CSR. Do you see that ESG replacing CSR, and should it really be that way, especially in mature organizations like yours, which have both strong CSR practices and strong ESG programs?
Thanks, Ivor. Great question again. Let me address your question on ESG and CSR as best I can. I think the way to describe it perhaps is to explain where CSR began, right? It really marked the starting point for businesses to take ownership of their impact on society. And in fact, without CSR, we would probably have not have had ESG at all. But I think the two are very far from being interchangeable, because while CSR really aims to make businesses accountable, ESG criteria makes those efforts measurable. Because CSR activities, they vary massively between businesses and sectors. There's a real lack of comparable metrics available. So ESG activity, on the other hand, is meant to be generally quantifiable, at least to a far greater degree. And I think, it has to be said, for many businesses, CSR has never really graduated beyond being an add-on to their main purpose and overall direction. It's really been a footnote in the annual report. It's an activity that's usually allocated, half a day of effort and focus once a year. And at worst, it's really become a marketing tool. It's allowed organizations to say what they're doing well without having to really back up its claims or talk about those areas where they may be failing. So in my opinion, CSR is really a subset of ESG. It's probably best fitted within that social category of ESG. And for many years, if the company had a well-run corporate social responsibility program, that was considered sufficient to claim that it is meeting those social investment requirements. Today, most Indian companies already have CSR programs, partly because the law mandates this. But the mandate has also made it harder to discern how one company is doing better in social governance than another, especially when they have both, reasonably well managed CSR programs. ESG policies, in contrast, are really criteria led. They require that they have to be embedded in the core business strategy, as I mentioned earlier, rather than being sidelined. And so the power of ESG really lies in that integration into its business. And I think what's really interesting now is how its momentum is being driven by asset managers, by consumers, by employees who are demanding transparent, purpose led business practices that align with their own priorities. And it's not just investors to whom ESG factors are important. Consumers want to know that the businesses that they buy from have positive ESG policies. Purchasing decisions are bound up in social issues, meaning companies have to focus not only on the quality and cost of their products and services, but also on establishing those sustainable, socially responsible, environmentally aware business practices in order to win and retain customers. So I think, ultimately ESG activity has the potential of replacing CSR because it has these, tangible, measurable, positive impacts. And CSR is merely a subset of ESG. I just want to sort of give you a quick example, from the Tata Trust perspective, because I think it's important to bring in sort of that intersection between philanthropy and ESG. And I think philanthropies like the trusts play an extremely crucial role in enabling the ecosystem for corporates to adapt to ESG. Philanthropic capital really has the potential to go to places where private capital still can't. We've seen this in the past when, renewable energy wasn't mainstreamed, or when we were trying to create climate mitigation strategies for the country. Philanthropic capital has that flexibility to drive stakeholder engagement, to build supply chain resiliency, to test the ground for investment before private capital comes in. And I think I just want to end on this point. 2020 to 2030 is really considered the decade of action. It's the most important time frame we have to make really significant changes to our systems, which will decide the future of our planet. The time frame is extremely short. The changes we need to make are massive. So there's a lot of pressure to accelerate efforts over the course of these next 10 years. And it's time to think about how we can build back better. We have to invest in sort of green recovery mechanisms for this nation. We have to bring sustainability to the mainstream. We have to really pivot around, which are going to be the Indian industries of the future, and to start building that resilience into our population. Back to you, Ivor.
Ram, anything you wanted to add over there? And in fact, Shloka, one of the points I wanted to make was, I know, CSR is often just taken as a buzzword. People don't really pay attention. But I think one of the reasons we put together this panel, and in fact, all of you, the companies that you represent, are all companies which are known for great CSR, right? You all, of course, the Tata Trusts, something that's it's perhaps the biggest name in India. Godrej, again, another kind of things they've done is wonderful. Accenture is a global name when it comes to these elements. And of course, Sudip, again, through his career and even what they're doing right now at his company, I'm sure they have some great initiatives too. I think so. I think one of the things we wanted over here was for great people from some of these great companies so that others could learn. That was the agenda. So, Ram, is there anything you'd like to add to what Shloka said on CSR, ESG, and philanthropy?
I think Shloka actually summed it up very well. It is a subset. And I think there's a few points I want to make around that same theme. I think, like you mentioned about the companies that have been doing great, who have been known for CSR, I would actually wager the fact that these companies were known for doing great environmental and social work before the term CSR became popular. So, pre-CSR, post-CSR, responsible companies are going to behave in a very responsible manner. So the essential ideas of CSR and the way it was created here was to make sure that even companies who didn't have a strong ESG focus could somehow do something to mitigate their social and environmental impact. So in many ways, I think CSR is sort of like the initial or the seed that it will enable companies to become very, very forward-thinking in ESG. So in an ideal scenario, if, say a majority of the companies, 70 to 80 to 90% of the companies started behaving responsibly on the ESG front, you would need CSR. That's the essential point. CSR is basically just, it's almost like a starter to companies who did not have other methods to focus on this. But I would say another aspect of it is also that, the metrics that we use to describe CSR and ESG are very, very different. I think a lot of people, when they look at CSR, what are the metric they look at? Is like, is the company compliant with the spend part? Like, are they spending 2%? Whereas when you start looking at it from an ESG lens, you start looking at impact in very different ways. What is the social ROI, or what is the impact created? How many, for that kind of money spent, I mean, what is the green impact? Were you able to do a watershed project where you were able to raise the water table of the soil over there? Were you able to increase the number of crop cycles? Were you able to improve the livelihoods of the households or the communities over in that area? Were you able to reduce waste going to landfill, say in a waste management project in a particular community? So the metrics of ESG are far more refined. And when a lot of people look at CSR, they look at it as more of a compliance thing. So again, we need to start looking beyond compliance. And to be really ESG positive, I think it's to not look at sustainability on the environmental social governance front as just tick boxes to be compliant with, but as genuine levers for growth. So I keep saying, sustainability is not just about surviving, it's about thriving. And I think Sudip made this point as well. I just want to add on to that point. Companies with strong, not just CSR, strong social, environmental governance parameters have over the last decade or two grossly been outperforming the companies that don't. So even if businesses are cynical and they don't need a reason, they need a reason for adopting strong ESG practices, it's there in the business indices itself. I don't think you need any further proof than that.
Well, thank you, Ram. I think you put it very, very well. And as we move into the end stage of this discussion, into what really needs to happen, really. Sudeep, I wanted to come to you and ask you, of course, ESG is often led by practitioners, but do you think that ESG really needs to move beyond programs and sustainability experts and should be led now by CFOs and their finance team, considering the importance that ESG really has on the bottom?
Yeah, absolutely. I would fully agree with that. In fact, if you look at the task force on climate related financial disclosures, that task force has clearly laid down the fact that just like how financial disclosures are signed off by the CFO and the audit committee, in a similar manner, all the disclosures for climate related financial impact again have to be dealt with. That is one. Secondly, if you look at the kind of regulatory, I would say, initiatives that have been driving ESG, I think Europe actually stands out. European central banks are actually asking the question, how much more capital is to be put aside for projects where there is, a climate change risk that can translate into a financial risk. So all this points out to the fact that at the board level, the CFOs and the finance directors, the audit committees have to really put in place processes that make ESG a part of the corporate strategy, number one. Number two, they have to ensure that they track, they measure, and they focus on the material ESG initiatives that are relevant for that company. And after having done that, they have to ensure that they do a good job of transparency and of good disclosure levels for investors to take note of. This is how they will be able to create differentiation for the company over a longer period of time. And if boards actually do that, sustainability is going to be the outcome. Sustainability of shareholder returns, sustainability of environment, sustainability of social equity, and a whole lot of other parameters. And that's how they will also be able to gain, because they will realize that a lot of the risk perception that investors have about their company is going to be taken care of. And that's the way you can actually get into more of the global capital flows, which are growing by the day. Companies, investors who make ESG investing a very critical part of their investor decision making process.
So that's a great perspective from the company side and the board side, Sudip. What they need to do. I'd like to take look at the other side now. What does India, and again, this includes industry as a whole, the government, regulators, etc. What do we need to do to move towards stronger ESG practices that are that build sustainable, responsible, and resilient businesses? What do regulators need to do better? And how do you bring in more transparency and standardized norms across industry? And perhaps, I'd like to ask one Ram to maybe start out with this as a practitioner, and then Vishvesh to kind of round this up from Accenture's own global practices in sustainability, etc. So, Ram, as a practitioner, perhaps if I could ask you that question.
Sure. I think there are a lot of things to be done. Like what Shloka mentioned, we have a lot of things to do in the next 10 years. One of which is definitely, I think Vishvesh touched upon this earlier. I think businesses need to get more active in advocacy, and they need to proactively approach the idea of influencing regulations and really pushing for forward-thinking regulations. The other aspect would definitely be, I don't think there is a dearth of technology, or there's a dearth of innovative solutions, both at the grassroots level as well as what industries are using. The sharing of best practices and the extension of sustainability to the supply chains. I think we've mentioned a few times on this panel today that the top companies seem to be doing well, but it's the MSMEs who, they're not completely. There's not a firewall between them and the larger companies. Many of them are often suppliers or vendors, or they're part of the value chain. So I think it's about how do we. I don't think we are mature enough to use a stick approach. But even if we can't punish bad behavior, I think it's time to start really incentivizing good behavior in some way for the smaller guys to become more sustainable. I think that's very, very critical. There has to be some sort of pricing mechanism for carbon, for water, which is more effective in how, and it takes into account the various risks. It's not just a cost plus pricing. It's not just, global cess, which is put on these things. Carbon at least is, somewhat priced through the cost of fossil fuels, but water is not priced effectively at all, which is why you are going to have a situation where it's going to go from being almost a negligible point on the P&L of any company to being priceless, where you're not going to have any of it at all. So I think bringing financial incentives and building the costs of mitigating climate, both water, waste, energy, into the overall ecosystem is very, very critical. And it needs to really penetrate deep into the supply chain. It's not enough for companies to just say, within the boundaries, within our fence, within our operations, we're sustainable. So already, with the commitment to things like science-based targets, which many Indian companies have done now, there is a greater focus on scope 3 emissions, which involves the entire supply chain. But the next question will be, yes, great, you've disclosed your emissions in your supply chain, but what are you going to do about reducing it? And how are you going to track it? So I think and for me, I don't look at it as a challenge. I think there's a huge opportunity for even, for not just consultants, for technology providers. And I think this is going to be where the jobs of the next decade are going to be created in building this ecosystem. So I think we should embrace it in India as a, decade of great opportunity. We can create a lot of value through this and, show the world a path to a more sustainable future in just a short period of time.
Vishvesh, if I could throw the same question at you from your advisory perspective, from the global work that Accenture has done, what would you say? What do you think India needs to do?
So a couple of things, Ivor, I think Ram kind of summarized. I think my personal belief, basis my work with clients in India as well over the last 2 decades, is really about capacity building. I think we really need a lot of capacity building in terms of creating awareness at the board level and also at the execution level in terms of understanding ESG, its positive as well as negative implications, and how do you drive it in an organization in a seamless manner. I think that's number one. Sudip also articulated, the role of the financial institutions is very critical. We have been studying this for the last 10 odd years. Consistently in our global as well as India CEO studies, it came out that finance is not doing enough when it comes to driving sustainability. But I think in the last, I would say 12 to 18 months, globally, there has been a big pivot where the largest financial institutions and the asset managers are publicly coming out and committing that, ESG is very important and we really need to embed ESG in our investment decisions. So I think that essentially needs to be made stronger and more rigorous when it comes to the Indian financial institution mechanism. And finally, I would say really from a mid and small size companies perspective, how do we simplify it in terms of reporting as well? So as Shloka mentioned earlier, it is matrices based. You have to report against those matrices. I know enough and more work has been done by the industry as well as government in thinking this big challenge through and simplifying and coming up with formats so that mid and smaller companies can also kind of report easily on ESG. But we really need to focus a lot on that and really come up with some kind of an innovation enabled by technology to kind of make it happen. So these are the three things I would say are very important from the perspective of scaling it up in India.
We've looked at it from the perspective of boards. That's again the top approach. Leadership. We've looked at it from the perspective of what governments need to do, regulators need to do, etc. But I think one of the key things in business, in life itself, is that unless you have buy-in at all levels, and I think India especially, unless you have buy-in at the bottom, right, it's very tough to sometimes put this into practice. Often things remain on paper and great plans, and often I don't, sometimes they just remain goals, or you might tick off boxes, but you don't really, might not achieve what you set out to do. So my last question to you all as a panel is, and I'd like perhaps Sudip to start out because he comes from an advisory perspective, but I'd like Ram, Vishvesh, and Shloka to really come at it from what y'all have really done within the organizations y'all work for, because y'all are practitioners also. So how do you really build bottom up buy-in into ESG? Or like I remember one Accenture paper that I read, which talks about embedding ESG into all that Accenture does. I'm sure that's what many companies would like to do. So Sudeep, would you like to start from an advisory perspective? How do you build bottom up buy-in, and perhaps others can follow and talk about what they've actually done to make sure this happens?
Yeah, I think again a great question. So I would look at it at three different levels. At the top level is the government and the regulators. Then we have the investors, and lastly we have the large corporations. Right. So it is the government and regulators who will decide. For example, what is going to be the format of the business responsibility report, whether it's going to be mandatory or not, whether central banks in India will actually incorporate ESG into capital adequacy calculations, right? So that sets the tone. It sets the tone for the investors. Now, there are two kinds of investors. There are the capital market investors. So we talked about the global capital flow, but there are also the other investors or the lenders or the financial institutions, like developmental financial institutions, the multilateral agencies, and the infrastructure financing institutions. They will have to incorporate ESG in a big way, because when they do that, they actually help catalyze financing from the private sector, which ultimately moves into the mid-market and the SMEs, right? And then talking about large corporations, I think Ram made this point about supply chains. I think that is the way to go for large corporations to influence the supply chains of the mid-market and the SMEs, which deliver to the large corporations. So just to give you an example, if a large corporation is actually outsourcing work, it makes sense for them to ask whether their supplier is actually implemented fair gender policies at their workplace. So they have a very, very important influential role to play. And at the end of it all, therefore, the bottoms up is going to happen, buy-in is going to happen when the SMEs, when the financing percolates down to the SMEs understand the importance of sustainability. The SMEs and the mid-market, they get actually differentiated in terms of their ESG strategies. There is still a long way to go on that front, and hopefully someday it will happen.
Shloka, what's your take on this, and how do you all really build bottom up buy-in into ESG?
Philanthropy really plays a very crucial role here in doing so, because COVID showed us how heartbreaking it is to really experience disaster in a country where we don't have those requisite social safety nets. And I think from the devastation this year that we've seen, we've learned that we really need to build resilient communities in order to protect our nation, especially in a warming world. At the Tata Trust specifically, we've kept communities at the heart of all of our sustainability efforts. We ensure that our work increases their incomes, protects them in the case of climate events, creates a really new and distinctly Indian, I would say, low carbon and ecologically cohesive model of development. So we're really spending this very decisive decade, as I mentioned earlier, investing in India's green recovery, in India's communities and India's resilience. And we have a number of programs which focus on building and supporting and scaling those adaptive and resilient models, which in turn will equip communities to face environmental challenges as well as mitigate against future impacts. I think one more really important point to sort of bring out here is that the pandemic also brought greater attention to social issues for the business community. And it really renewed that sense of importance for ESG. It's increased the scrutiny of challenges from, healthcare inequities to insufficient childcare systems. The interconnectedness of our global society, I think, has been more evident than ever. And philanthropic giving, not just from the social sector, but particularly from companies, has really explored a very global to local dynamic. There's been a focus on speed and impact. We've seen corporate donors, increase unrestricted grants to local communities around the world, and of course here in India. There's been a great amount of relinquishment, the earlier needs for more control and information. And what we've seen coming out of this is really, trust-based corporate giving programs that have demonstrated a really powerful business case for philanthropy and for ESG that I think is something that we can build on for the future.
Ram, what would you like to add to that?
I think both Sudip and Shloka have covered it from two very different lenses, but still looking at the various aspects when you look at bottom up. For us, it's also about within the organization. I think Shloka briefly touched upon it earlier when she's talking about the modern day employee and their expectations of being part of a company that does good, or that is considered to be strong in terms of ESG. They may not frame it in those particular terms, but I think there is a push and pull effect. There is definitely a greater thrust for people to want to be involved in something which they feel is good work, and they want to be a part of that. And I think as the sustainability teams or the various business units, it's our responsibility to not only make it a greater part of their role, no matter which role you're playing. I think there is not a single role in any company which does not have an ESG element to it. I think so, including it formally as part of their roles, including as part of KRAs, that's one step. The other is also communication. I think it's very, very critical. I think oftentimes communication around sustainability tends to be very general. Saying, like for example, on World Environment Day or on Earth Hour, there'll be a bit of communication around it. But I think communicating the impact that your company, your organization, and your function has in terms of on the environment and the social aspects, and what the company is doing to mitigate that. Being very transparent about it to your employees is a very, very powerful tool. It shows that you are bold at that you're taking on large, ambitious targets, but you're also very honest in reporting about them. And getting buy-in from the top. I mean, if they see, the right from the promoters to the business unit heads to the plant, everyone's, sort of filtering in sustainability in everything they speak. That makes a big difference. It's very easy to sum it up in one phrase saying walk the talk, but that actually what works. When you see demonstrable results, when you see, when you see that you're part of something much bigger than yourself, and that whatever you're doing contributes to a larger good, I think that makes a huge impact. And to amplify that impact is where communication really is important, both to the outside world and internally. I think one of the biggest things where Indian corporates are lacking today is also in the communication bit of it, be it to the government on best practices and ways to move forward, or even among themselves, sharing best practices. Sustainability is not a competition. I mean, there's no, the competitive advantage or disadvantage to be had by sharing your practices with your peers. No, I think it's greater almost like an open source thing is what we look at for sustainability, and I think that really has to catch on a little bit more.
And last but not the least, Vishvesh, I look forward to hearing from you. I mean, you've heard from all these other
Yeah.
I mean, what are some of the best practices you've seen of building bottom-up buy-in, and how do you all do it at Accenture, really embedding ESG into all that you all do?
No, I were a lot of learnings in terms of what I heard from Shloka, Sudip, and Ram, and I'll actually share, our perspective. So, our new CEO, Julie Sweet, essentially has come up with the phrase that sustainability is the new digital. And she came up with this phrase, I think about an year and a half ago, and it has given new wind beneath our sails as far as sustainability within Accenture is concerned. So essentially, as you articulated, we want to embed sustainability into everything we do. We are essentially a services company. So we don't want to just do sustainability advisory for our clients, but whatever we do within Accenture world, be it consulting, be it technology or outsourcing, each and every one of our offering and services is going to be now embedded with sustainability. Just to give you an example, if you are talking to our clients about a technology transformation program, then we are talking to them about how taking their IT infrastructure to cloud will actually save carbon emissions. So that's the conversation we have. If we are talking to our clients about procurement transformation program, and as Shloka mentioned, not only save on costs and choose the best suppliers, but also kind of choose suppliers which are ESG compliant, and essentially focus on supply chain emissions, on making sure that the sourcing which you are doing is ethical and aligned to global best practices. So it's essentially becoming a fabric of anything and everything we do for our clients. Now, within the organization, we want to be a sustainable corporation, and we want to be sustainable corporate citizens. Our core skill is and our core asset is people. And reflecting and introspecting on that core asset, we realize that the best way we can give back to communities in which we work is through skill-based programs. So a lot of our CSR investments, Ivor, essentially go towards skillings leading to employment. So it's all outcome-based, where we actually partner worldwide with the civil society sector to really skill communities so that they can actually gain employment. Another example, and this is the last example I'll share, is really on the social side. We took a call that we really need to move the needle when it comes to diversity. So we've given ourselves a target of 2025, where 50% of Accenture will be men and 50% of Accenture will be women. And this is monitored very closely across levels.
Well, I think you've really rounded it up really well, Vishvesh. Ultimately, ESG is about every aspect. There is gender diversity involved. There is inclusion involved. It goes really far, far beyond just green and just the environment. Thank you so much, everybody, for being here. I think we've really looked at all the aspects of ESG. I myself have a much clearer understanding of it, and I'm sure the audiences watching will gain a far greater understanding. And I think there are obviously some challenges which remain. Financing remains a challenge to some extent. Mid-market, I think taking ESG to mid-market and SMEs is a challenge. There's lots that the government is doing, regulators are doing. There's lots more they need to do, but I think ultimately a lot of companies are seeing the benefits of bottom-up buying and really going about it. Thank you so much for such an enriching conversation. Thank you for your time, Shloka, Ram, Vishvesh, and Sudip. It was a real pleasure having you with us, and hopefully next year when we do a World Environment Day special, or maybe like Ram said, maybe do it before World Environment Day, because this is so important. We'll have much more progress to report. Thank you so much.
Thank you. Thanks a lot.
Thank you.
Thank you.
Thank you.